This next panel, the topic is AI-powered early warning systems, accelerating AI detection of regulatory risks in consumer interaction before they escalate. So we're going to explore more on the customer experience side, but more internally focused. And on this panel, we have Derek Higginbotham, the president and CEO of First Electronic Bank, and then John Beccia, co-founder and CEO of FS Vector, is going to moderate for us. So let's give a round of applause for Derek and John.
All right. Good morning, everybody. It's great to be here, and I want to just start out again by thanking Spring Labs and the sponsors for putting on this event. Really appreciate having discussions around this topic. And I think for us in this short discussion this morning, I think we want to get a little more into the weeds in terms of some of the use cases and applications, and Derek from his personal experience and what his bank is looking to do around the use of AI, and some of the pros and the cons of that and what it looks like, and especially around some of the risk management areas and regulatory compliance areas. Again, my name is John Beccia. I'm a CEO of an advisory firm called FS Vector. We are a Washington-based firm. What we do is basically hopefully help fintechs, banks, and others build and scale and deal with a lot of these novel regulatory compliance issues. We also happen to lobby in DC and work with all different types of stakeholders around and educating around some of the benefits and risks associated with these areas. So Derek, maybe just a quick intro in terms of your background and the bank in general, and then we'll get a little more into the details. And I always like someone who transitioned from a legal role into a business role, so you can discuss that too.
Sure, thank you. I would first acknowledge that this panel got a lot more difficult about an hour ago when the first panel said all the things that were on the iPad of things that I was going to try to convey during this fireside chat. So we're going to probably improvise a little bit as we go and try not to just repeat smarter people than us. I'm Derek Higginbotham. I'm the CEO of First Electronic Bank. My background is a lawyer. Most of my career, I was a lawyer. I'll back up. Right before my real career started in school, I had wanted to do microfinance in developing nations. And started doing that, was in East Africa, and a longer story led me to kind of totally shifting career path and going to a big law firm where we represented General Motors through the acquisition by U.S. Treasury, and nothing to do with developing nations and nothing to do with microfinance and nothing to do with fintech. I started taking steps from there kind of back towards where we are now. Was a lawyer at a big public company in consumer finance. Started learning about the fintech movement in the earlier days, and made a jump to a startup that was, I think, chasing the heels of some of the folks who are here and is still going. During that company, I got to know the bank and I got to know this business model. And after about 4 years at that fintech, I came to the bank as the general counsel, where I did that role for a little while before taking on this.
Great. Well, you mentioned there was we may repeat some things, but I think you have a unique perspective, especially, with First Electronic Bank and some of the things you're doing there, and certainly an important player when you talk about, there's still very few banks that are doing bank partnerships well with fintechs in this space, and so we'll get a little bit into that. But just high level, in terms of the use cases, we've heard a lot about, from a customer-facing aspect, there's a lot we can do in terms of improving the customer experience, whether it's use of chatbots and customer service, whether it's helping customers actually, frankly, get access to capital and get loans and get credit. And then a lot on the back end, too. We're going to get a little detail around risk management and compliance. But where, out of all these, from a First Electronic perspective, or even from your personal perspective, where do you see the real growth opportunities, and what have you done to date? And also, where do you see the challenges?
Sure. My colleague Brian was speaking in the other room at the beginning, and he talked about how easy it is to make cases for investing in new technologies on the revenue side, on the customer acquisition side. I think there's probably wonderful things to do there, not really where our focus is at the moment. I think there's also wonderful things to do in creating efficiencies in kind of people-centric activities like call centers, That's also really not what we're thinking about. We're not really thinking it right now about saving money. We're not even really thinking right now about making more money. There's a clear call to action in our business model in this fintech wave of the banks and the fintechs that are doing this. If they're going to stay running through the regulated space, we have to have our game way stepped up. And so we are thinking, like, the last 3-4 years have been all about how do we create so much analytics, so much quality thought and quality issue spotting and resolution that we are kind of at least keeping up and hopefully exceeding the expectations of a regulated space as opposed to the non-regulated space where this kind of thing does run and could run much more easily.
Are you seeing pressures coming? Is it competitive pressures? Are you seeing pressures or more of a demand from your customer base? Or what are you seeing that's driving a lot of this adoption from your perspective?
I think that everybody is suffering, for lack of a better verb, through this really dynamic moment of there's a lot more scrutiny on these kinds of programs, probably deserved scrutiny. Like the fintech movement happened so fast. And I think over the last 3 or 4 years, I think there's been this awareness across the ecosystem, I think from the vendors into the big fintech platforms and then fintech platforms into the bank and into the regulators of there's a lot of risk management that needs to be wrapped around and infused so much business that is now happening in the fintech movement. So I feel like it's just that. So there's a part of it that is making money. Like we need to be able to do a good job at what we do for fintechs to want to partner with us. If we're not catching issues and not protecting the program, that's not going to be good for them. And also if we're overdoing it, if we're overly conservative or overly reactive, that's also not going to be a good experience. So I'd say it does help protect our revenue. It's also like responding to this pretty loud call to action, like I said, from the regulatory community. We see it in like 17 consent orders in the last 2 years. Everybody is aware that like the supervisory process is really involved. So I'd say from all sides, there's this call to figure out risk management at another level than we have kind of ever done before.
Yeah, I'd agree. I think, this is you mentioned the fintech movement, or it's a natural evolution of where we're, what's happened over the last 10 years with fintech and the way people look at financial services and disrupting financial services and the need to do more and to make it the technology to be, there's a lot of benefits there in terms of, building out and making ease of financial services, certainly providing access to financial services. And, I think we'll talk about the regulators in a bit, but I think there's also been a lot of friction on that in terms of, the technology moving forward and the difficulty and some of the obstacles there. But before we get there, maybe talk a little bit about, maybe talk about people versus machines, right? There's a lot of misconceptions about what AI can do or cannot do. Kind of what is the line of demarcation? Where do you think, what resources do you need from a people standpoint versus a machine standpoint? And how do you view that in terms of building out your program?
Yeah, I think there's two very different perspectives for this. I think there's one question of what can the technology do really well? And then there's also, if we're going to be in the regulated space, what can we create really good predictability and stability and consistency around so that it can stay kind of acceptable or become acceptable in the regulated space? I think those are two separate questions. Some of these tools, I think, can do amazing things. Can they do the amazing things in a way that's kind of predictable and consistent enough for where we want to do it? We've been pretty excited with what we've seen it doing already in the what it can do space. I think for us, what we're focused on is the complaint reading thing. That's the starting point. The product I think most people are talking about in the room today, and that's been fantastic. I think what the capabilities of that is showing are very exciting. We're a long ways away from letting that artificial agent take the place of the human agents and actually making calls on things. So we're thinking of this as like we've hired a new really smart dude to sit next to our normal staff and read more than anybody else can read and like work overnight and crank through so much more information that our normal agents can. but not to take the place of actually the judgment making of the humans.
And how do you, in terms of, you mentioned you hire a special, an expert in this space and some other resources, but how do you weave, from an operational standpoint, how do you weave that into the day-to-day? Is there other committees? Is there, is there board involvement? Is there, how do you look at this in terms of making sure that you have your arms around it from a bank-wide perspective and that you in your seat as a CEO really understand what's happening?
And really, it's the discovery still. This is pretty new technology. It's I think a ways away from us just kind of unleashing it. So this is a discovery. I think it's really important to be in the game, actually playing with these tools, learning about them, thinking about how we'll be able to solve problems with them. And for us, this, as much as anything, starting with this tool was that we needed to start somewhere because there's clearly a whole lot of power in it. So I would say I don't have all the answers yet. We don't even mean to have all the answers yet. Right now, we're trying to explore it in a way that is safe, but actually teaching us how to think through solving problems with this kind of power.
Yeah, no, I think that's a good segue into really diving a little more into the risk management and compliance perspective, because you're right, we don't have all the answers, but it's really understanding and educating and understanding where the risks are, frankly. We talk about having a risk-based program and all the things that lead into that. And, in the past, my background is in banking, in legal compliance. In the past, I remember systems that we had which would not tell us anything, right? We'd have rules-based systems that would generate alerts and create backlogs, and then the regulators would tell you need to hire more people and go off and really, take care of, think about compliance, more of a check the box regulatory pageantry exercise than anything else. But, we heard earlier about some of the areas where AI can help in regulatory risk areas, whether it's BSA AML or fraud, or certainly complaints like Spring Labs is focused on. Which one of these areas have you taken a deeper look at, or think about, areas you can focus on, and what's your approach towards it?
I'd say, and we're trying to figure out how to do analytics on everything. Like for every function, there's some data being thrown off by what we're doing. We're trying, and before ChatGPT got released, we were already thinking about how do we aggregate more data, how do we get it structured, and then how do we layer on some analytics on it. So that, I think, was there already. Like this new wave that came with ChatGPT and LLMs, I'd say for that, the thing that we were looking at is reading through complaints and ultimately reading through kind of customer inputs on what their experience is like. So maybe I'll just back up a little bit. I think this is how this product, the Zenko complaint reading tool came to be. We were at Money 2020 a year ago, and I had on my mind a lot, okay, how are we obviously need to figure out how to get more analytics running on the data that's being generated here. We were kind of befuddled by the fact that a lot of the data that we would love to tap into actually wasn't structured, and it was really hard to get it structured in an effective way. So big on our mind was, okay, consumers are talking all the time, and it's getting captured in these programs, and the way we're actually learning from that is pretty rudimentary, right? It's like having agents trying to read through complaints. They can only consistently tag so many interesting insights on those complaints, right? You can maybe give a human agent 20 things that they're watching for in a complaint and tagging for. So it's pretty rudimentary to go from that to then actually trying to aggregate into big, interesting insights. So we were sitting on that, wrestling with that. John Sun and Payman had somehow pulled me into a bar at the end of the day, and I think they were trying.
All good ideas happen.
Yeah, a lot of good ideas. I think this actually worked out. I think they were trying to talk about using a chatbot, which there's obviously good potential uses for improving the historically miserable experience of interacting with chatbots if we can use smarter tools. So that's what we were talking about. And I thought, this is not that interesting to me right now, because right now we're captivated with how are we keeping these kinds of programs safe by figuring out all the problems, like long before a regular finds those problems. And we got to be able to mine this stuff to do that. And so we came up with, we got talking about this problem of all these great data in this unstructured environment, and the unstructured inputs of like calls and emails. And I think it came out of that conversation that they could probably actually use these tools to organize that data really well and categorize like we've never been able to do historically with human agents.
Talk about the approach in terms of, based on your experience with even other areas that new products and things you've tried to implement in the past, from a compliance standpoint, what are some of the mistakes you've seen, or what are some of the things that you need to implement to be successful? We always talk about having a comprehensive program and having policy procedures and training and being able to audit and test things. What is the approach you guys take in terms of thinking these things through to make sure at the end of the day that your regulators are satisfied with how you're approaching this, especially in this new area?
Yeah, again, in this area, it's discovery. I think before we think that these artificial agents are going to start making calls, maybe interacting with people, we're going to have to create a lot of risk structure around it. Ultimately, I don't think we get to really call it mission accomplished, that we really get to have like complete adoption until we know that when the regulator comes in for supervision and they say, okay, put all this information in the data room and we're going to read it for 2 weeks and we're going to then we're going to sit with you for 2 weeks and make sure that we understand how it's all working, and that after that last 2 weeks we're going to walk away feeling comfortable that this is all stable, predictable, and consistent. And now we know, like, what are we going to put into that data room that's going to let them come to that conclusion? I don't think that we really get to adoption, and we're not ready for that. I think the idea of trying to treat these as kind of a new employee that you sit next to the traditional officers is what we're going to have to do. For us, at least, that's how we're going to have to do it for a while. Once we're really understanding how the tool will work, then we'll start doing champion challengers. We'll start using kind of test methodologies to figure out like where are our artificial folks weaker or stronger than our traditional folks, and start building, I think, monitoring of them, management of them. And I think we get to ultimate kind of true adoption and kind of mission accomplished once there's enough structure there that somebody who's not in it every day can walk in, look at how it all works, have outputs that demonstrate that it's all consistent, stable, and predictable.
Makes sense. Let's talk about probably one of your other favorite topics, which is the regulators, right? And so, they do have a difficult job, especially trying to understand the technology. You can't regulate something that you don't understand what the risks are. And so that level of engagement and education is important. And we've seen a lot of enforcement actions, especially in your space, in the partnership space. We've seen regulators being uncomfortable with certain structures and certain relationships. What do you think needs to be done to bridge that gap and to engage and to educate regulators to get them comfortable with what you're doing or thinking about doing?
Again, I think the way I'm thinking about it is, okay, how are we going to have them leave an exam room after 2 weeks feeling like this is consistent, predictable, stable? I think that answer for that is going to, there will be different things. Historically, you would generally do this by doing transaction testing. You'll do some sampling, and we'll pull out one file out of every box, and we'll make sure that the things we care about that day are represented right in that file out of every box. And you got to do that on enough boxes that you get to some kind of statistical significance. I think that's historically the way that we did it. Like, the outcome of that is you have looked at enough of the examples to know that they're trending the way that you want them to trend, and maybe trending to like 99% certainty that you want them to trend, and then you can call it good. And for us, I think we're not wanting to solve world problems by pulling one file out of every box, and I don't think we're wanting to solve world problems with the confidence levels of just kind of statistical sampling. We have these tools now that are like can let us look at every single transaction, like every single loan, every single swipe, for a lot of different data. And now the kind of data we can look at are even like much more expansive. With these new tools, the way we're able to structure data that was otherwise unstructured, like we're going to be able to say, like, look, here we can run this report. You can see the code that is doing this query on the data every single day. And these are the outputs. And then I think the management of that, this is going to be a shift in perspective. And I think for us, like, we're wrestling with how to shift an organizational perspective it's a lot more about like how do you do change management of the code that is doing that work, and then how do you go validate it periodically? Like, is it reports? Is it alerts? Is it kind of humans that are still going to do some transaction monitoring testing? There will be a mix of things depending on what the tool is, but ultimately I think that we'll have to have the data outputs from these data environments that are demonstrating like, we have a consistency of results that is higher than what we could show in the traditional way, in the one file out of every box way.
How about a little more into the context of so you do a lot of the bank partnership work, and we're seeing certainly a lot of uncertainty in that space, and we announced last week that we're working with a coalition to create some standards, especially from the non-bank side, but obviously as a bank, you have a primary regulator and you're getting a lot of pressure or a lot of questions around how you're approaching third-party risk. How do you look at that in terms of, solving that problem and, in terms of, and then what is the answer? Is it more... And it's also difficult because there's a lot of gray area, right? And so it's always this question of, do we get more rules? Do we get more principles-based regulation? But how do you look at it in terms of, kind of solving that or getting more comfortable around it to be able to build your business in that space?
Yeah. You don't know this, but I actually talked to Seema, who's, I think, appointed to run that effort last week. And then there's a few people in the ecosystem that I think are really trying hard to figure out standard setting. So we're definitely open to leaning into that effort. I think that's going to be important to figure out how to just create acceptable standards. It's a lot of all of it, right? It's talking to peers to try to figure out what best practices are. We get feedback from our fintech partners. Many of them have multiple banks, and so like we hear about like, okay, you're doing this thing, and this doesn't seem consistent with other banks, and is that good news or bad news that it's not consistent? And I think we're also picking up data from the supervisory process. I think it's picking up from all of it and just driving towards what kind of risk management tools are again going to create like stability, predictability, consistency, and I think we all got to just be looking as broadly as we can and digging as deeply as we can to figure out like what other tools are going to get there.
And I guess from a kind of bigger picture kind of thing, you spend some time in D.C. and you see the value of engaging with different regulators and Congress. And, I know we've had some pronouncements in the AI space. I know there was an executive order and, so, some things from the administration. Where do you see the role of Congress here or other agencies in providing more guardrails? Or you think it's still early days and we need to let the technology play out a little bit before we get there?
I hope that we can have a real dialogue between the regulators and the operators. I feel like that in some parts of the country that's been a little bit harder the last few years. I think it needs to be a dialogue, and I do think there is a big movement within the regulatory community of trying to figure out kind of operationally how are we going to do this. I think we just need to keep that going. I think both sides probably will hopefully be leaning into that. And I do feel like on the industry side, and I guess that the bank part of the industry and the fintech part of the industry, I think the message has been heard from the 17 consent orders of the last 2 years that even if people weren't inclined to be super focused on that, like everybody ought to be. And so do we think about, okay, how are we doing these money-making businesses and also having all the risk management around it?
Do you have concerns? Obviously there's a lot of benefits to this, but then some of the downside risks around, some of the discriminatory aspects of it, or some of the bad data, or some things that can be generated from some of these tools. What kind of concerns you the most, or things that you really think you need to focus on in terms of that downside of the use cases?
Certainly some kinds of use cases, discrimination is going to be a really important thing. Like if you're making decisions about who's getting credit decisions or actual access decisions, I think that will matter a lot. I think in our space, I think it will be worrying about kind of are there hallucinations in the data, or are the models kind of drifting faster than like we're noticing and not actually picking up like the interesting signals of there's an actual real problem that's happening in 1 out of every 10 consumers. I think for these kind of products, I'm thinking more about that. Like, how are you going to actually like make sure it stays consistent and stays tuned to the really important things. I think I would get worried about. I think that I am worried about is that if we start having this products like this complaint reader run really well for 2 years, are the humans going to get so comfortable that like just relying on it that it does it, and at some point it's just, like the tool just kind of starts to drift and stops catching the things that are really important. I am worried. I'm mostly worried about that. Like, do we get a laziness that ends up kind of stopping, like preventing us from keeping the artificial operators really honest?
Got it. I think we're just about out of time. Any last word or advice for people just getting into the space or as they look into it? Or
I think I don't know if it's advice or as much kind of like a plea or trying to create an echo of other people who are saying the same thing. A lot of the problems that I think can occur in banking occur differently in environments like ours as opposed to historic ones. We have a lot of people that have been in banking for decades and that have tried to solve problems, that have been used to solving problems in kind of traditional ways. I think it's going to take a lot of work to develop people into having all kind of the risk-mindedness of the historic system, but to solve problems with data, I think we just need like a much bigger talent pool. Like, we need to be better about, like, all of us in it already need to be better at thinking about how are we going to solve our problems with data, with harnessing data, instead of just kind of brute forcing through traditional methods.
excellent. Well, we're out of time. Join me in thanking Derek first in the panel.